where you are in crypto. You were so negative for a while and just definitive, like you always are. You may know nothing, but you're never in doubt. But you were so negative. Then you got totally positive. Do you own Bitcoin now? Kevin, what's your position in crypto right now? You do. Have you sold major parts of it? You have a lot of it, or as much?
No, look, Bitcoin is not a coin, Joe. It's simply software. Ethereum is software. If you own, HBAR software, if you own Microsoft, if you own Google, why don't you own Bitcoin? It's all software. It's productivity software.
You own one Bitcoin? Do you have a real position in it? Because you're a wealthy guy.
I have millions of dollars. 20% of my portfolio is now in cryptocurrencies and blockchain.
Hey, Kevin, so I was on the phone yesterday with a sort of a big-time crypto guy, and he was talking about how crypto was like the multiple operating systems for telephone, for mobile telephones years ago. But it made me think maybe that means we're in the beginning of something, which is fabulous, but it also makes me think of Palm. Does everyone remember Palm? Or RIM, which is BlackBerry? Or, you could go down the list. iOS and Android didn't show up to the scene until a decade or two after the fact. And I only raise it because I wonder sort of where you think we are in all of this and whether it means that the Bitcoins and some of the coins that we're looking at now and talking about will be around or will be obsolete in a decade from now.
Well, you have to be diversified. I own 32 different positions, including equity in FTX itself. And I have to disclose, I'm a paid spokesperson for that company. I'm backing their initiatives. But the whole point is, you don't know who's going to win. Is Ethereum going to win? Is Solana going to win? Is it Helium? Or is it Avalanche? I own them all. And luckily, they're just software development teams. You go meet these people, you find out they're in their 20s, they're the smartest engineers in the world. If you graduate from MIT right now, you don't want to work for an old industrial company. You want to go to a blockchain company. So we should support this initiative and be the leader in policy, because right now the world is waiting. The Canadians are more advanced. They have the very first crypto exchange. They have the very first ETF with Bitcoin in it. How come we don't? The same in the United Arab Emirates, the same in Switzerland. We are so far behind in policy for this nascent industry that's going to lead the world of financial services. We got to get going. Now, there is a bill. I'm reading. It's over hundreds of pages. This thing is, I went up to the Senate last Thursday and met with Senator Loomis and a bunch of bipartisan senators. They're trying to get their act together on this thing. But we got to get going. Chop, chop. Let's lead the world and put this thing together, because we're lagging.
In the next 10 years, the crypto, blockchain, Bitcoin, all of this innovation will be the 12th sector of the S&P.
Joins us now. Kevin, thanks so much for taking the time here with us today. We do know that mass adoption of tech innovation has had this history of outpacing government regulation. So how confident are you that sensible government regulation will happen in blockchain and cryptocurrency before true mass adoption and the next inflection point happens?
I'm very confident, because the pace and acceleration of policy proposals coming out of bipartisan Senate committees on the Hill has never been greater. We've got the Loomis bill, we have the Haggerty bill for stablecoin, the Toomey bill for stablecoin, we have the POTUS executive order, all within 6 weeks of each other, all discussing the future of cryptocurrencies. And you're right, we need to catch up with the rest of the world here, because regulators in other jurisdictions like Canada, the first to allow a Bitcoin ETF and Ethereum ETF, the first crypto exchange dealer broker was licensed there across the country. Switzerland, England, United Arab Emirates, they're far advanced. And I think our government understands now that we've got to catch up quickly. And you saw a major move just yesterday in the announcement of BlackRock and Fidelity putting $400 million into USDC, the Circle product. That's unprecedented for such staid financial services companies to make a bet that large on cryptocurrency.
Kevin, Dave Briggs here. Got to get your take on Elon. Today, the offer, $54.20 per share to take over Twitter. And your friend Mark Cuban says he thinks that Elon is just effing with the SEC. What do you think he's doing? What should the board do? And if you're to have a beer with Elon Musk, or a joint, I guess, in the case with Elon, what do you want to ask him about all this?
I don't think this is a crazy move he's making. I'll tell you why. Elon Musk and Tesla is the only automotive company in the world that doesn't have to spend a dime on marketing. And a lot of that came from his use of Twitter over the years as a vehicle, as a megaphone to talk about the innovations of his products and services, whether it be in space or electric cars or what have you. And he took advantage of that. Now he starts to see the platform go awry. And if you're an investor in this thing, as I have been, this is a miserable, miserable stock. I mean, it's delivered no value to shareholders for a very long time. Now, maybe you blame the platform, or maybe you blame the management, or maybe it's a combination of both, but it doesn't matter. It's been misery. If someone offered me $50+ a share for this, that's a done deal right now. Because I don't know how you monetize this thing. It's been really clipped. Even in the heyday when Trump was using it as a promotional vehicle for his campaign, it wasn't Twitter that delivered the eyeballs. It was other media taking the tweet and then broadcasting it. So from that respect, it's really not used by that many people in the United States. It's a very small subsegment, not a great advertising vehicle. And now you have all of this decision is trying to curate which voices should be on it and not. That doesn't help long term. I think this company needs to be shaken up, and if Elon wants to do that, let him do it. Somebody has to do it. It's just been miserable for investors.
I mean, and speaking of turnarounds, though, when you think where Bitcoin and crypto started versus where it is now, I mean, you weren't always this bullish on crypto. What was the turning point for you, and what do you think is going to be the turning point for the next wave of crypto investors?
The turning point for me was change in policy by regulators. I'm a highly regulated individual because I have so many investments in traditional financial services companies. Now, Bitcoin is not a coin, it's software. Ethereum is software. Polygon is software. All of these are software development teams creating innovation in financial services, the largest market in the world. And to the extent that they can add value, transparency, speed, all of that, that's why it has such potential, and it hasn't gone away. Now, sure, the prices are volatile, and the reason the prices are volatile is that sovereign funds and pension plans, for all the excitement about Bitcoin and cryptocurrencies, own this much of it, nothing. And they're not going to do that until there's policy in place. You want price stability, you want price appreciation, allow a sovereign running a $200 billion mandate, a 1% position in Bitcoin. That's how you get there. But they're not going to do it until there's policy in place. And so I'm very pro-policy on this. I'm very fortunate I've been able to meet these senators, discuss their bills with them. I'm glad that they're asking private citizens to come to the Hill and give their input. That's great. But again, we've got to accelerate this policy. And I think the best way to do it is pick one asset class. Let's go stable coins. The Toomey bill, the Haggerty bill, both propose and contemplate making this a policy decision. They want transparency. They want to see what's backing up the stable coin, if it's US dollar and what other assets. They want to audit it every 30 days. I'm fine with that. And they don't want any assets inside it longer duration than 12 months. That makes total sense to me. Now, why wouldn't we push one of those bills through and get this one asset class that allows people to buy stable coins, lend them out at 4 to 6% interest, and at least protect their capital against inflation? You can't do that with savings in a bank account. You're basically being taxed at 5.5% with 6% inflation. Nobody gets more than 50 basis points of interest anymore. So there's really good use case for this, and we've got to get it going, and policy is the way to do it. So I'm very encouraged about that. Now, obviously, as an investor, this is now, I really believe that crypto will be the 12th sector of the S&P in 10 years, so I'm going to invest accordingly. It's now 20% of my operating company's portfolio across 32 different positions. I'm very comfortable with my diversity, and yes, there's volatility, but I'm essentially waiting for the government. I want to be ahead of the curve. I want to own Bitcoin before the sovereign wealth funds buy it, and that's my bet. Now, everybody else has a different opinion, that's fine. But clearly, on the first day at Bitcoin 2022, when I made that keynote on the Wednesday, that was 1,500 institutional investors. That's the first time that's ever happened. Now, they own nothing, but they've come to learn, and that's the first step. And then you've got all the policy coming our way. This is all good as far as I'm concerned.
If you did get policy, what type of exposure would you be willing to add on to your portfolio?
I'm maxed out already. I'm 20%. So my rules are basically the standard portfolio management rule. You can never have more than 20% in any one sector and no more than 5% in any one stock. That's where I'm at right now with crypto. But this is a different time, because how many times in your investment career do you get an opportunity to invest in a brand new sector of the S&P? Never. This is a once-in-a-lifetime opportunity. Now, either you believe that or you don't. You have to make your decision. But once you say yes to crypto, you need diversification, you need policy, and you have to have a team that understands it. We don't have the compliance infrastructure yet, but that's coming. Look at the work that's going on at Circle to make it really easy for institutions to use USDC on a compliant basis. Look at FTX. That's a really investment-grade compliant platform. Now, I have to disclose I'm a shareholder in FTX and a paid spokesperson, but I use the product. I don't endorse anything I don't use. So at the end of the day, you've got a lot of innovation coming here, and you have to make a decision as to when you're going to engage. I've made mine.
What role do you anticipate that centralized finance will attempt to play in decentralized finance?
Great question. Now, in my case, I'm betting both, and here's why I'm doing that. Let's go up to a jurisdiction that's far advanced to ours right now. That's Canada, where they licensed the very first crypto exchange with a dealer broker license. That is a centralized wallet. So Canadians are now allowed to download that app in every province. They can ACH cash from their bank account right into the exchange account. They can trade certain coins that the regulator has approved there on a compliant basis. They have tax reporting as well. But the key to that, it's a central wallet. But we found out, now I know this because a company I'm involved in and a shareholder in called WonderFi acquired that license recently. And what we found immediately was the accounts, the 400,000 plus accounts, also wanted a decentralized wallet for things like NFTs. So there's a use case for both. Once you acquire the customer, you don't want to lose them. So we immediately made it easy for those that wanted both to have both, because you may want to keep certain assets in a decentralized wallet where you have direct ownership versus fractional ownership in a centralized wallet. But the point is, why not give users both? And that's what happened up in Canada. I think the same thing's going to happen here stateside. Same thing in United Arab Emirates, Brazil, Switzerland, Germany, England. There's so much innovation going on in different geographies with regulators at different stages of releasing policy on this that we have fallen behind in the US. And that's why these bills are coming so fast and furious, including the POTUS executive order.
Speaking of, perhaps we need a crypto-friendly president. Yesterday, it was interesting. Mick Mulvaney, the former chief of staff of President Trump, said 3 people could beat Trump. He said Tim Scott, the senator from South Carolina. He said Ron DeSantis, the Florida governor. And then he added The Rock as a third. Is someone from the business world capable of running and winning the presidency? And who would you vote for?
Well, there's precedent for what The Rock did. I mean, obviously, Trump was a very famous television reality star. I knew that because Shark Tank and Celebrity Apprentice started at the same time, and we used to run into each other in the forwards all the time. And he used that platform to build policy, which was very friendly at the end of the day. You may not have liked him as a president, and I hate to get into politics, but his policy was very pro-business. And that's really what I think a lot of people are looking for, some guidance on a more pro-business aspect. I will say one thing about the POTUS order. Having read it, you'll notice deep buried in the back end of it is this comment about climate change, and that is a direct swipe at Bitcoin mining companies. One thing to note, and I brought this up at the keynote at Bitcoin 2022, you try and have to figure out, in terms of investing in Bitcoin, one way to do it is if you're not allowed to own the coin itself, you can own the shares of public mining companies which trade in proxy to Bitcoin pricing. And so companies like Marathon, Hut 8, Hive, Riot, they're all great companies that were mining Bitcoin, and they were using carbon offsets to claim carbon neutrality. Well, if you read the POTUS order, and even worse to that, the memo from the SEC in the last few weeks, they're going to require audits of carbon credits. Now, everybody knows carbon credits are BS, if I may use that term and excuse my language, because there's no way to audit it. There's no ledger. You can't do an activity that creates carbon and say you bought an acre of the Amazon rainforest and say they offset each other. But the SEC order contemplates asking an auditor to sign that statement, just like a financial statement every quarter, taking on risks that they will not take on. So I mean, in the case of those companies that I had indexed for ownership in Bitcoin, I sold them all because they've got a world of hurt coming. The new model for Bitcoin mining that is emerging very quickly because of what the POTUS order said and because what the SEC is indicating in their memo is that it's hydropower, hydroelectricity, and nuclear power that is the best way to mine Bitcoin. And those projects are springing up all over the place, all around the world. The biggest one right now is in northern Norway. It's called the Norway Project.
It's run by a private company called BitZero. The largest shareholder is the United Arab Emirates. So they're providing the equipment and the capital to build that out, all hydroelectricity. But watch projects come in upstate New York, Montana, North Dakota, Tennessee Valley. These are all areas where there is hydroelectricity available. And so this is the new model. So it's pretty tough for the early pioneers in Bitcoin mining who got stuck before anybody knew anything about this carbon audit stuff. They're the ones with the arrows in their back. And then these new companies over the next 24 months will go public, like the BitZeros, and institutional capital will go there. But this whole Bitcoin mining issue is going to be long-term good because about 85% of dams in America were built contemplating turbines that were never installed. Now investors like me are happy to install those turbines if we get the right to put a data center beside the dam. This is a really interesting innovation that will push us to more green electricity.
First, we saw that massive sell-off in cryptocurrencies on Monday. There's a lot of uncertainty about what comes next. Kevin, you said that 20% of your investments are in crypto. And so I just want to start with, what are you doing? Are you exiting some of these positions? Are you buying more?
No, I'm actually averaging down on a couple of the big market cap names. I mean, one of the challenges, and this is proof now for why we need legislation and policy on crypto, because if we had institutional capital coming in under the market, if they had allocated 50 basis points or 100 basis points to, let's say, Ethereum or Bitcoin, Solana, Polygon, whatever, you would have had a bid. Instead, because we're basically under-owned by institutions, we have tremendous volatility. And we've seen this before. This is not new. It'll, recover eventually, but this is the nature of crypto unregulated. And so my argument is this really should get us focused on policy. Right after the midterms, I'm hoping for policy on stable coins and then into other assets as well, NFTs, that kind of thing. We're at the nascent stage, but the volatility is because we don't have the institutional bid.
I do want to talk more about policy in just a moment, but before that, how should retail investors be thinking about this sell-off? Is it an opportunity to buy at a discount, or is it just too risky to make any sort of bet at the moment?
No, I mean, everybody has challenges with volatility, but I remind everybody, just go back 17 years to a stock called Amazon. It also corrected 38 to 50% every year for 12 years in a row as people tried to figure out what this new entity was. And so there's always tremendous volatility in new and nascent technologies and new markets. And crypto is a new market. I still predict in 10 or 12 years, it'll be the 12th sector of the S&P. There's just too much productivity opportunity here around payment systems and all kinds of other attributes of these blockchain projects that we just don't yet know what the upside is going to be. And I'd argue this, if you go to any graduating class, particularly now, it's very timely to say this, ask any engineering cohort, you're going to find a third of the engineers go onto the chain. They want to work there. They don't want to work in the other 11 sectors of the economy. They want the opportunity to create something new. And that's why you've got so much intellectual capital going into this space. You know with certainty down the road that the next genius ideas are going to come from this. Any college, any university, any engineer, they all want to work on the chain.
Well, on that last point, let's talk about crypto-focused businesses for a moment. Coinbase this morning announcing that they're cutting 18% of their staff. Gemini had a similar announcement, as did Crypto.com. MicroStrategy is down 75% year to date. Are crypto companies uninvestable at this point?
No, I wouldn't say that. There's two categories of crypto companies, ones that use leverage and ones that don't. Now, when you have a very volatile asset and you have the fortitude, I'm going to use that word, to use leverage to enhance your returns, you also run the downside risk of what happens when there's a major correction, as is occurring right now. You can get caught offside pretty quickly. And so Celsius, that's a good example of that. And I don't want this to sound trite, but let me explain how bottoms are made in any market. I don't care if you're in equities or in debt or in crypto or in real estate. You always need a big player to go to zero. That always helps, whether it's long-term capital or whether it's one of these crypto infrastructure companies. I would like to see, and I don't want this to happen, but it always gives you a good bottom when you get a large player over-levered that goes to zero. And that always tends to be the beginning of the rebuilding process. So if you have to sacrifice someone who used too much leverage, and it's always leverage that does this, somebody's over-levered, positions are complicated, they're not transparent, they're not liquid, and they go to zero. Someone is out there on the brink of zero. That's okay. In fact, I'd argue that's a good thing when we get it. Now, do we get it this week? Do we get it next week? Someone's going to zero. I don't know who, but it'll be great for everybody else that survives because everybody will learn from that. And that's what I like about a washout, an event. And I think we're due for one in crypto land. And I don't know who it's going to be, but I guarantee you 100%, I've seen this movie before, you will learn later that somebody put on a heavily levered position, they got wiped out. And it's good. It's a good thing.
So to that point, how are you navigating this crypto winter for the crypto businesses that you're involved in?
I don't use leverage on crypto because I've seen volatility like this in the past. There are certain assets where I might put leverage on, but it won't be in crypto. I mean, when you see volatility of 50% on an 11-month basis, which we're seeing in Bitcoin, 60%, 20% days on Ethereum, you can't afford to put leverage on that. But, you know, people will learn their lessons. This is a good thing in the sense that this generation of crypto investors has not gone through corrections like this and not gone through them with leverage. Now they're going to learn an important lesson. Everybody I know that has survived volatility has had a very important lesson or a date with leverage. And they didn't have a great dance that night, I must tell you.
Are there any takeaways for retail investors who are looking to buy the dip and add to their portfolio? Any categories of cryptocurrencies they should be looking at? Anything that they should be wary of?
I think right now, if you're, licking your wounds, go to the large cap projects. I mean, the Ethereum, Bitcoin, obviously Polygon, Solana. Polygon's been slaughtered, and it's a good project. Great opportunity to add to it. I have very big positions in these names, and I've been nibbling as well. There's nothing wrong. The one thing I would tell everybody is you can't pick the bottom. It's impossible. You have no idea when it's going to happen. But if you're staying long the category, you need diversification. I have so many different positions on right now, and they're all over the map. Now, come year end, what'll happen, because this is a year where we're going to be looking at tax returns on all crypto trading and income, there'll be a lot of maneuvering on the projects that did not recover to take them as tax losses versus the ones that did. And that's going to be the nimbleness of trading. And that's why it's important to look at your positions and make sure you have liquidity in them, because most of these projects are very, very liquid, so it's not a problem. And we actually haven't seen, we had the Binance story yesterday. They looked for a couple of hours of room on what they called a lazy trade. The Celsius thing, well, that's a gate. That's not good. So that will not end well. And when you lock the gate in a hedge fund, basically, you upset a lot of investors, and when they get the opportunity to sell, they do with a vengeance. Never good to do this. Can't help them, but they didn't understand the situation, I guess, but there'll be some money lost there. But Binance is the big daddy of them all on platforms, and they seem to be surviving. FTX looks fine. Circle, rock solid, didn't break a buck. Put out an announcement to their investors yesterday saying, look, to the extent we've had to have margin calls, there hasn't been a problem. I mean, these are the things you look for in stress situations. You've got a lot of infrastructure holding its own. So I think there has been some maturation or maturity coming into the crypto market by these behemoth infrastructure projects. I'll say the same for BitBuy and for WonderFi, holding their own, making sure their clients are being taken care of. I have big positions in those companies as well. So we're all, weathering the storm, and you have to do this. There's nothing else to do except watch with wonder.
Now, you said that it's hard to call a bottom, but let's say we continue to see a sell-off. Is there the possibility that the crypto sector, dropping in value could hurt the U.S. economy ultimately, or is it just a degree of magnitude so irrelevant that it's not going to make much of a difference?
Well, the great news about the crypto economy and even positions like Bitcoin or Ethereum, these are decentralized holdings. It's not just the American investor exposed here. Bitcoin is all around the world. And it's only 880 billion before the correction, which, as you rightly pointed out, is a big nothing burger. And so that's nothing. I mean, even all of crypto under 2 trillion is still nothing in financial services. So there's so much upside to this sector. When we do get policy, when we get institutional investors and sovereign wealth involved, then you'll start to see real assets. But, if Bitcoin went down another 20%, it wouldn't really matter because it's spread around everywhere. And most of the holdings are not institutional. For all the excitement about Bitcoin, no institutions own it yet. And that's the decision you have to make at a time like this when you're an investor. I mean, this is an opportunity to say to myself or anybody, look, if I believe in 3 years, 36 months that there'll be policy on Bitcoin, do I want to own it after policy comes and all the institutions start buying it? Or do I want to take a chance and live with some volatility now and buy it here at 24 or 23 or 20,000, whatever it's going to go to? I don't know. But if you believe in Bitcoin, it's a buying opportunity, but you can't guarantee that you're catching the bottom. Nobody catches the bottom. It never works that way.
So let's return to that question of policy. The crypto space is expecting to get some clarity, a lot of draft legislation circling in Washington. What are your thoughts on some of the bills that we're seeing put forward?
Well, I've spent a lot of time on the Hill in the last 2 months. I've met with everybody that's brought a bill forward. Haggerty, Toomey, Lummis. I mean, there's a lot of interest in this. Here's what I think is going to happen. They're going to pick one thing. They're going to pick one thing and put policy on that. It's going to be stablecoin to start. And the policy there is going to be pretty clear. All the bills say the same thing. They want total transparency. They want an audit every 30 days. They want no duration more than 12 months on any asset holding up the coin. So that means T-bills on average are going to be 7-8 month duration and US dollars backing it. And that's the same kind of rule you're going to find in a Schwab money market or a Fidelity money market or any money market fund, with the benefit of all of these systems, once you put policy in place, having the ability to be a payment system. So I would love to see this happen. And the reason I think you'll get policymakers on both sides of the aisle backing this one thing after the midterm elections is this guarantees making the US dollar the currency of default in perpetuity. Once you back the US dollar on a stable coin, everybody's going to want to use it. I'm not going to use the Chinese one. I'm not going to use the Swiss franc. I'd be worried about liquidity. I'm not going to use the euro. Euro's all over the map. I'm certainly want nothing to do with Russia, and I'm not going to use the British pound. I want the US dollar to be a payment system that everybody else will accept around the world, like they do for commodities like oil. It's priced on the US dollar. So if we get stable coin policy, you talk to any policymaker about this, they get the joke in 2 seconds. It's so simple to understand this. Some of the issuers will become FDIC insured. They'll be like a bank. Others will say, no, I don't want to be FDIC insured, and we'll have a plethora of different offerings all around the same policy. So I can choose, maybe I'll put some money into the Fidelity one. I'm saying the same thing I do right now. I put dollars into the Oppenheimer money market. I put money into Schwab's money market. So the same thing will happen on stable coins. Now, we just have to wait for policy. And right now in USDC, the one that's holding the buck, rock solid, 54 billion in assets, right through the week, right through the correction. No problem with liquidity. I wrote more contracts this week on it. So look, there's a lot of people interested in making this work. I think we'll get policy there first.
Kevin, yesterday I heard you speaking about Bitcoin mining and potentially its role in creating a greener future. A lot of people might not understand that because of all the FUD surrounding Bitcoin mining. Can you explain maybe the role of Bitcoin mining in creating green technology, or actually paving the way for more green technology?
Yeah, and it's a good observation you're making. Let's start with fund flows, okay? Because what Bitcoin mining is a CapEx. It's an infrastructure play. It's a data center play. So when the first companies started to build up hash rates here in the United States, they basically linked into the existing electricity lines, not knowing what the source of that power was. It might have been flared gas, it might have been coal, it could have been whatever it was. It's blended. Now, that was fine 2 years ago. And why it mattered was that many large institutions, like sovereign pension plans, they are not allowed to own Bitcoin, but they want exposure to the assets. So what they did, and I know this because I'm in the indexing business, so let's say you're a sovereign wealth fund in a Middle East country and most of your wealth came from oil, but you don't want to invest more in oil, you already have that. So you go to an indexer and you say, okay, index me the S&P 500, X oil, X airlines. We don't want to own those. And so indexers like me do that. So we're exposed to fund flows by the trillions, 24/7. We're servicing these giant entities, and they are
majority of wealth. U.S. pension plans, sovereign funds, this is where most of the money is in investors. So the reason I'm walking you through this cycle is you'll understand this massive switch that's going on in Bitcoin mining. So we indexed all these companies. Companies like Marathon, Hive, Hut 8, Riot, and others. And that's how these large sovereign plans own Bitcoin, because the price of these public stocks goes up and down as a proxy against Bitcoin pricing. So if Bitcoin pricing gets cut in half, they get cut in half. If it doubles, they double. So it was a great way to own Bitcoin. Until the ESG mandate came out. It started with BlackRock, then you saw it in the POTUS executive order, then the SEC just announced they were in a memo that they're contemplating carbon audits